Hello, and thank you for joining us once again for our International Market Update video for April 2024. U.S. economic data in April not only continued to support a soft landing as the base case, but may have some economists contemplating whether the second most likely scenario is a no landing scenario, i.e. no significant economic slowdown. Although GDP numbers for Q1 came in slightly lower than expected at 1.6% year over year versus 2.5% expected, the components that fell short of expectations are more temporary and volatile in nature. Both inventories and net exports disappointed. That said, consumer spending, which is the largest component of GDP, remains strong and shows no signs of slowing down. Employment numbers, which are the biggest variable supporting consumption, have also shown no signs of decelerating. So while some economists are still concerned that the latent impact of higher rates will eventually lead to lower economic activity, as long as we continue to get follow-through from the labor market, consumption should remain strong, and therefore thoughts of an economic slowdown will keep getting pushed back down the line. And in the meantime, without labor market slack, inflation numbers have remained sticky and above the 2% Fed target, with both CPI and PCE above expected, and core PCE, the Fed's preferred measure, printing 2.8% year over year for April. As a result, forecasts for Fed rate cuts continue to be reduced for 2024, and consensus has moved from expecting as many as 6 cuts at peak to now between 1 and 2 cuts, if any, for this year. Consequently, the equity market took a step back on expectations of higher rates for longer, falling as much as 6% intra-month, but has since rebounded as Q1 earnings have thus far heavily outpaced estimates, coming in up 9% versus the usual outperformance of roughly 5%, and the S&P is now down only 2% from its highs. 10-year rates also reacted by widening 40 basis points to over 4.6%. So all eyes remain on employment. Barring any missteps there, we should continue to see strong consumption and economic activity, and therefore higher rates. As for the election, polls point squarely at a coin toss, with both candidates roughly evenly matched. Trump is reported to have a very slight lead in 6 of the very important 7 swing states, but it is still very early, and some of those leads are within the margin error of polling. While it is clear that the ballot is set, it seems that voters are moving away from third-party candidates, which at the margin has benefited President Biden. This month, President Trump is in court. The Supreme Court is hearing arguments from President Trump's legal team that he should be protected from prosecutions from the lawsuit and his role on the January 6, 2022 insurrection. In parallel, President Trump's hush money trial and accused campaign financing irregularities has completed jury selection, and hearings are moving ahead. Both of these cases should be watched closely. Should Trump lose one of these 2 trials, the impact to his campaign could be negative, as independent voters have indicated that a conviction would keep them from voting for Trump and could tip the scales in Biden's favor. So all eyes are on the courtrooms on the election front. In the meantime, the economy remains strong and markets are overall buoyant despite some continued signs of weakness in both Europe and China on the economic activity front. Please reach out to your banker or investor with any questions. Thank you as always for tuning in, and see you next month.